Good evening from London. Washington and Beijing appear to have stepped back from the brink of a damaging trade war, delivering a major sigh of relief for global markets. After 100 minutes of talks in South Korea, President Trump hailed his meeting with China's Xi Jinping as a great success, saying the two leaders reached finalization on several disputes and will now work towards a new trade deal. China has agreed to resume large-scale purchases of American agricultural goods, a key point of contention, with Trump urging US farmers to go out and buy more land and larger tractors. Beijing, meanwhile, emphasized avoiding a vicious cycle of retaliation, with both sides committing to deliver tangible progress quickly. The move eases fears of renewed tariffs between the world's two largest economies and signals a reset in relations after months of tension. Meta has absorbed a one-off $16 billion tax charge linked to President Trump's so-called Big Beautiful Bill, briefly sending shares sharply lower before they recovered into positive territory. Excluding the charge, Meta says third quarter net income would have surged to $18.6 billion, underlining the company's continued dominance in digital advertising and AI-powered content delivery. The tech giant raised its capital spending outlook to as much as $72 billion as it doubles down on artificial intelligence investment, with CEO Mark Zuckerberg calling this the most exciting period in our history. Meta also confirmed fresh job cuts within its AI division as major tech firms collectively prepare to spend $400 billion on AI infrastructure this year alone. Shell has delivered another resilient earnings beat despite softer crude prices, maintaining quarterly share buybacks at $3.5 billion and reducing net debt to $41.2 billion. CEO Wael Sawan says the company is continuing to close a valuation gap with US peers, supported by strong performance across deep water assets and LNG expansion in Canada. Adjusted net income for the quarter came in at $5.43 billion, well ahead of estimates, even as profit dipped around 10% year on year. Shell remains focused on cost discipline, portfolio streamlining, and potential deals where it has a competitive edge, while exploring divestments in its US chemicals business and potential European shutdowns amid tougher margins. And a historic shake-up on Europe's busiest rail route. Virgin has been given the green light to challenge Eurostar's 31-year monopoly on cross-channel train services. Richard Branson's company plans to launch routes to Paris, Brussels and Amsterdam from 2030, unlocking £700 million in investment and creating 400 jobs, according to UK rail regulators. Virgin still needs financing, safety approvals and a commercial agreement with Eurostar, but the move promises more competition on pricing and service for travellers. Those are your main stories from London at close of business. I'm Juliana Olayinka.